How's it going, everybody? It's your boy, Homie G, and I'm back. All right, my little homies, today we're going to discuss mortgages, personal finance stuff they don't teach you in schools. So what is a mortgage? Basically, a mortgage is a bank loan or a note, and it's in the area of consumer credit and finance. Who gets mortgages? Qualified borrowers, people that are interested in purchasing a house. When should you get a mortgage? Well, most people think, I'm gonna get a mortgage because prices are down right now in the market. That's not how you should base your decision to buy a home, my little homies. You wanna do it when mortgage rates are down or low, and you're gonna be hearing that in the news. You're gonna be hearing that pretty much everywhere. People are gonna be talking about it at parties. They're gonna be saying, have you seen the news lately? Mortgage rates are so low, you should buy a house. And yeah, it's true, you should when mortgage rates are low. You don't wanna do it when mortgage rates are high. You're gonna pay more for that mortgage, a lot more interest. Banks are gonna get more of your money. So you wanna base your decision to buy a home, your affordability, all on the current mortgage rate, my little homies, okay? All right, moving on. How do people get mortgages? Basically, they put in an application online. Most banks today, they got mortgages online. It's simple to follow the instructions and step by step, enter your name, enter your social security number, yada, yada, yada. You have to agree to a credit inquiry. That's where they check your credit. They want to know if your credit is bad or if your credit is good. Obviously, you want your credit to be good. They also want you to fill in information about your income. How do you make money? Do you have any assets? And that's things that are worth, some value that might make you some money, a rental property, for example. It gets more cumbersome, this application process, when you have assets. You have to enter all the information for every asset that you have, including your IRA or retirement accounts, et cetera, et cetera. But I'm going far too much into that discussion. Basically, they want to pre-qualify you for that mortgage, and it's all going to be based on your income, your assets, but more importantly, your debt. If you have a lot of debt, that's not good. Banks aren't going to want to pre-qualify you if you have more debt than all the other plus categories. All right, my little homies, so keep those credit cards down, the debt down, keep all the other loan things that you might have gotten from, car purchases, or maybe you bought something else and you financed it, furniture. Yeah, people finance stuff, right? Furniture, cars. So yeah, keep that down. You don't want to have a lot of debt. Now, why? Why do people get mortgages? To build equity. When the heck is equity? Equity is ownership stake. Basically, as you pay down your mortgage over the course of 30 years, and most people get a 30-year mortgage, meaning they're paying mortgage payments every month for 30 years. Now, the bank loves 30-year mortgages because you pay more interest to the bank over the course of 30 years. Some people who can afford it pay for a 15-year mortgage or get a 15-year mortgage, and they're done after 15 years. They own 100% of the house. The bank owns 0% of the house after 15 years. Most people, 30 years. So to build equity, but also to not have to shell out money and throw it out the window every time you make a rent payment, right? Because that's not your house. You're renting it. The landlord is the one that's collecting your rent and using it to pay his or her mortgage. And sometimes they're cash flowing, meaning you're paying more than what they're paying on the mortgage note. And so they're making money from that rental property. So you don't have to do that. You might want to get a home loan or a mortgage and get into a house. And lastly, to pass it down to the next generation. If you have kids, this is the wealth effect, okay? You gotta have some asset to pass down to your children. I really strongly believe in that. If you don't have anything to give to your children by the time you croak, and by the time you die, then I don't know. I mean, I don't think that's good. I think as people, especially as minorities, brown and black people, other minorities, but anyone in general, you want to give something to your children, and a house is the easiest thing to give to your children. Getting into it is hard, but if you pay it down, you do right financially by yourself and your family, in the end, you can will a house to your children and they have an asset. All right, my little homies? So this has been all about bank loans, mortgages. If you have any questions, drop them in the comment box. If you want me to get more in depth on mortgages, because this is just the basics, want me to get advanced, in other words, just drop in a comment. Or if you want me to discuss another financial topic, anything, credit cards or whatever else you have an interest in, just let me know. All right, my little homies, I'm out.